Markets are finally moving again, which is great to see. So I do think we're going to have some really nice opportunities coming up in March, which is why in today's weekly Forex forecast, we are talking about the DXY, the euro, the pound, the dollar yen, and also the Australian dollar. So a really nice week of trading. In fact, this past week was my best week so far this year, which is saying a lot because January was also a really nice month. And before I get into this too, guys, if you do want my help with your trading, including real-time discussions, seeing my trades in real time, including the entry, take profit, stop loss, and also my trade ideas throughout the day, 2 VIP-only videos, and also the complete course, check out the link in the description of this video for 85% off lifetime access. Or if you're on the website, click on that Join VIP link. Okay, so let's get into this, guys. First and foremost, February was, for the most part, a pretty slow month. We did get a pullback from the DXY, but really, for the most part, over these few weeks right here, you can see where it was just mostly sideways. Okay, yes, it was lower, but it was very, very sideways. And what I alluded to in last weekend's forecast, okay, 1 week ago, is I was talking about the potential for a dollar short squeeze. And the reason for that is you can see that off of these lows back here, we had this trend line, and then off of these highs, we also had a trend line off of this high up here. And you can see where this did end up triggering a short squeeze here on Thursday. So this is exactly what I was talking about here last weekend before the market broke out. Now, what dollar bulls had to do here on Thursday and also on Friday too, I want to see some follow through here, is they have to reclaim areas like 107.20. So you've got this high back here, and you can see where we have these highs, we have these lows, and also these highs through here. So this is now going to be a critical area where we need to see the DXY closing today above this. Now, keep in mind that this is the last day of the month too. So this is not only a daily and weekly close, this is also a monthly close. Now, 2 things there, right? First of all, monthly closes are going to be significant in terms of what we get for the next month. And furthermore, the last trading day of the month tends to be a bit erratic. So do be careful out there. Although I really think that we got most of the erratic in volatility, here on Thursday versus Friday. But anyway, guys, this is going to be critical for the DXY. We want to see this market closing back above this area here. You can see that so far today, it is serving as new support. Now, also keep in mind, though, that we have a trend line off of this high back here that we've talked about a few times here on this channel. So off of this high right back here, you can see where the DXY was holding above this through this area. Okay, all this consolidation up here. And then we got the close below, and now we're getting the close back above. So that makes this down here a potential fake out, or really just a reclaim of this 107 area. So I'm pointing this out because we could still see a dip down here into this level to start March. So don't just think that this is going to be the bottom here for the DXY. We could still get in early March, a pullback down here into this area before we get a bounce. So really that's it for the DXY. The market has to hold above this 107 area going into March to expose higher levels. Now, if we get the DXY moving higher, and this is where there's always 2 sides to the coin, because on the one hand, you have the market reclaiming levels like this potentially, right, going into February. We don't know that yet because we still have 6 hours left in this close. I'm making this video on Friday, so we do still have to see more from this market. And also the fact that you've got to keep in mind too, though, this up here at 108.50, this is the 2025 open. So not only is this going to be resistance on the way up if we do get that rally, you also have to keep in mind that the DXY is closing a month below this. Okay, so if we look at the monthly time frame, the reason this is significant is you can see that back here, okay, this right here was the December close. This was the January open and close because it was an indecision candle. And now we're getting the DXY closing below that 2025 open. So again, significant for a couple of reasons. First, this is going to be a critical resistance in March. And furthermore, you now have a monthly close below the 2025 open. All right, so that could be indicative of potentially another pullback from the DXY. And I've talked about this area down here, right? Of course, we've got this area just below 106 and also 104.6, that open FEG from back here. And that's yet to be filled. Now, there's no guarantee that we do get that, but this right here, okay, could be, and we'll talk about this more in the future if it does pan out, but this could be indicative of a future pullback from the DXY following a retest of 108.50. All right, so in my opinion, if we do get the DXY closing above this area here today, going into the February close, okay, so closing above this area through here, that could be good enough for some relief in early March. At which time, though, I do think you've got to be careful up here in this area, right, around that 2025 open, because that could be the signal for another rotation lower from the DXY. Now, if it were to start closing above this, of course, that would be different. Then we'd be looking at 109.50 toward those range highs. But ultimately, this, in my opinion right now, is the range going into early March, as long as the DXY holds on to 107.2. Next up is the EURUSD, guys, which I got short here. I mentioned this in the VIP group. I announced this in real time on Thursday. So you can see here, if we look at the 1 hour time frame, this is the trend line that I talked about in a video this past week before we got the breakdown. And I mentioned how I was looking for a break of this trend line. So if you look at this on the 4 hour time frame, you can see where we got the breakdown through here. All right, so breakdown in this area and a perfect retest right here on this candle, right there to the pip. I have not changed this level at all this week. And you can see where we got the retest here. Of course, we had those Trump comments on Thursday. I was getting in before this on the retest, had nothing to do with Trump. And he obviously sent the market lower, which I'm not mad about. So I am still in this trade. I did take some off today at the mid-range, which this is another level that I had on my chart here this week. So this dotted line through here is the mid-range of the current EURUSD range. So if you take your fibs, essentially from this low down here up here to the high, you can see where the 50% comes in right here. And that's exactly where we saw the euro bounce today. Okay, so no surprise there. So I did take half profit down here in this area. Now, you also have these closing prices back here that are going to be local resistance for the EURUSD, and that lines up with the DXY around that 107 area. So this is going to be your local resistance going into March. Of course, we have support down here at that mid-range around 103.80. And then below that, you've got the 2025 open down there around 1.0355. So this is going to be support. This is resistance up here. And this is why, too, I want to point out that even though we are seeing some momentum from markets, you've got to keep in mind, too, that we do still have some indecision from these markets going into March, because you've still got these markets range-bound, right? So even though we are getting some momentum, at least last week, this is certainly not a trending market. However, at the same time, I do think that there have been some really nice opportunities over the last week, and I think we're going to have a really nice March as well. I had 3 trades this past week. All 3 were profitable, and so it was a very nice week, definitely better than the first few weeks of February. So anyway, guys, this is going to be your range right now for the EURUSD. In order to open up downside targets like these lows down here, the market would have to get below not only this mid-range right here, but also that 1.0355 2025 open. All right, so it would have to trade down here on the high time frames to flip this to resistance, open up some of these lows down here. Now, alternatively, if we were to see the EURUSD close above lows like this back here, right around 1.0422, close up here, then you've got that move back here toward this resistance area, right? But in which case, I think if you were to get that though, and the DXY were closing below 107, then that would start to look a little bit more bearish US dollar and bullish on the euro. So right now, guys, I am looking for a continuation of this move as long as the DXY can hold above 107.2. So another pretty clean chart here in terms of the short-term setup is the pound. So I talked about this in yesterday's video as well, and I mentioned this to VIP members earlier in the week, and this is really the advantage of being in Discord too, because you get insights like this before you get breakouts or breakdowns. I was talking to VIP members about this when the market was back here in this area, and I mentioned to keep an eye on this intraday channel or the short-term channel right here. We got the breakdown. We haven't had a retest up here just yet, so we could get that in early March. Okay, so keep in mind that this, it doesn't mean that this is going to be the high going into March. We could see a sweep of these highs up here, full retest, and then that rotation lower. Now, one reason why I think we could get a pullback here from the pound is, first of all, we have the DXY, at least for now, holding above that 107 area. Okay, so as long as that's the case, I do think the pullback potential is there for the pound. And furthermore, you've got areas like this back here. So for the pound, the 2025 open is 125.15. Okay, so it was this candle right back here. So just above this critical area around 1.25. Now you've also got this open FEG back here just below 1.25, where you can see that on this breakout candle, we never got a retest down here in this area. Okay, now it doesn't mean that we have to, but what this does mean is that you have open orders resting down here in this region. Okay, so liquidity down here in this area that could serve as a magnet for the pound as long as it's below this area around 126.40. Okay, so this is going to be resistance up here. You've got support coming in down here in this area. And this is going to be a very, very strong support for the pound over the coming days as we head into March, simply because of, like I said, this is the 2025 open. You've got this key horizontal through here. You've also got this trend line off of these lows. So this down here, very strong support for the pound and resistance up there around 126.40. All right, so short term, as long as we're below this area up here, I do like the potential for that pullback down here into this area, at which time we probably see the pound kind of range here a bit until markets figure themselves out. So next we have the dollar yen, which I want to say that this is kind of on the back burner for now. It is on my watch list, but it's definitely not high up on my watch list, only because the price action here is not very favorable. And I do think there have been a lot of better opportunities out there in these markets, and this just doesn't really appeal to me right now. But I will tell you, though, that if the market can reclaim areas like this back here, right around 152 in March, then that could give us a really nice setup here for the dollar yen. Now, you might be looking at this and thinking, why would you be looking to long a reclaim of this level? Why wouldn't you be looking to short it? And that could work out, right? Maybe that's in your wheelhouse. Maybe that's your trading style to look for, shorts up here on levels like this. And make no mistake, this is going to be resistance, okay? This isn't me buying down here or buying here. What I want to look for is a high time frame close back above this to get long on a retest, okay? Now, it doesn't mean that it happens. If it doesn't happen and the market rotates lower, so be it. That's why this is just on my watch list for now, and I'm not trading it. I used to trade retests like this of key levels. However, I found a better way, and that is trading fake outs or reclaims. And the reason that you get moves like this is because of liquidity, okay? There was obviously liquidity down here in this area based on this low, and we saw that tagged here recently. And the thing about reclaims or fake outs on high time frames is that they are also very high probability. All right, we'll look at the Australian dollar next, and I'll show you an example that we talked about this past week that has played out really, really well. But you see it time and time again where high time frame fake outs do tend to work out. So for the dollar yen, really simple, guys. You've got support down here at 149. And this through here, I want nothing to do with. This does not interest me at all. What I'm looking at is this area between 151.80 and 152. Going into March, if we do see daily closes above here, I will look to long this on a retest down here for a move back there toward levels like 155. All right. So we'll see if we get it. But again, all of this through here, I really want nothing to do with. I do think there are a lot better and more obvious opportunities out there than trading this sideways chop. And last but certainly not least is the Australian dollar, which I talked about this past week. I believe it was on Tuesday. I put out a video talking about this right here, this buy side fake out that we got above that December trend line. So you can see right here that, and this is my bread and butter setup, guys. I mean, just so you know, this is what I trade over and over again. And this is what I'm referring to when you get fake outs like this on the high time frames. They are incredibly high probability setups. They don't always work out. There are no guarantees in the market. But in my experience, majority of the time, talking 7 or 8 times out of 10, these are going to play out. So you can see that right here on the 4-hour time frame, if you look at it on an intraday chart, you can see that off of these highs back here, we have a very well-defined trend line. Going back to December, we had the close above. This was also a daily close above. Daily close back below, retest as new resistance. Now, like I said in the video this past week, though, this retest right here was the ideal entry, okay? Ideally, what you want to do here is look for shorts up here in this area, get your stop loss, well above these highs, not just above these highs, because sometimes you will get a sweep, but your stop loss up here and then ride this thing down. Now, this retest, though, was unfortunately right around midnight my time, so I was not awake during this retest. So the next best thing here, and I talked about this in the video, but the next best thing was to look for a short based on this breakdown, okay? So what we had here was a trend line off of the closing price, the 4-hour close from February. So this was a trend line that was intact all February long until right here. Okay, right through here, we got a breakdown. So I was shorting it through here, announced this in real time to members and VIP, as I do with all my trades. And this is nicely in profit. Now I took a little bit of profit down here at 63.30, this support level right before that CPI out of Australia. And I did take a little bit more here on Friday, okay, or technically on Thursday. And the reason for that is just because this was up really nicely and we were getting to move down here into the point of control. So this was actually down here in this area. This was my initial target just below these lows. However, I decided to keep a little bit on and trail my stop loss just because of what we're seeing from the DXY. and even the stock market too, because what's happening right now with risk assets is really driving the Australian dollar lower. So as long as that's the case and I don't see any let up there, I want to ride this thing lower, trail my stop loss on the rest of the position, and see if we can get a move down here towards some of these lows. Now, the 2025 open here for the Australian dollar comes in at 61.86. Okay, so this right back here was the 2025 open. This is going to serve as support over the coming days. It could even get tested today, depending on how things close up the month. But this right here, buyers are probably going to step in here. I'm not saying that the market is going to bounce from here. I certainly wouldn't want to buy this. This is not something you want to buy, guys. But it's more just there to let you know that this is going to be support. So if we do see a bounce from this area, don't be surprised given that it is the 2025 open. All right, so for the Australian dollar, again, I am short from up here in this area on that breakdown. I took profit through here and also on a sweep of these lows. The rest of it, though, I am looking for a move down here toward these lows. Given what we're seeing from the DXY, I do think that, and also the stock market, as I said, I do think this area around 61.30 could be interesting here over the coming days, heading into March. And also the fact, too, that there is the potential that we get a move even lower from the Australian dollar here down toward levels like 60, okay, 0.60. And the reason for that is, first of all, you can see that we have this trend line off of these highs, and we have this trend line off of these lows. So this right here is what's called a broadening wedge. And buy-side fakeouts, or any fakeout like this to one side of a pattern, often triggers an extended move in the opposite direction. And a lot of times you do get a retest of the opposite side of the pattern, which in this case would be down here, okay? So we'll see if we get it. Another reason that 60 is really interesting is if you go back here on the monthly time frame and you go all the way back to the great financial crisis, what you'll notice is that that was the low back there in 2008. Okay, so this is when, stock markets crashed, and that is the low right there at 60, which we have not seen tested here over the past few months. So that could be a magnet here for the Australian dollar. Also, too, like I said, we got that buy-side fake out to one side of this broadening wedge. So there is that likelihood that we could see the move down here toward this area. But again, I will be taking some profit here and riding the rest towards 60 if we get it. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. Claim your 85% off lifetime access. See the link in the description of this video, or if you're on the website, click on that Join VIP link. Enjoy your weekend, trade well out there, and I will talk to you again on Monday.